Hello and welcome. Today's date is in that of Sunday. It is the 2nd of December 2018. A computer programming video with the results of trading random markets or random price movements and seeing how well you would do trading 4% moves, 10% moves, 20% moves, and 40% moves. Meaning, when your portfolio is up that much, you would sell. And when it's down the reduced equivalent, you would buy it back to that level. For what I want to see myself is just how well trading small moves and large moves happens to be. Now, there's an interesting situation within the small moves. And I knew this even before I started writing the program that would be the case. And the results right now for me show it make no difference, or I don't got the answer. But this is random numbers. I just made these numbers up, designed so long term the market should break even. Most of these moves is what it does. Is it changes the market. So if so in this case here, the market would lose about 0.45% of its value on this particular move. Most of them are small moves. There's a fewer decent sized moves like 0.8% and 1.1, 1.2%. There's even less 2-3% moves, and there's even less like 8, 9, 10, 15% moves. In fact, there's very few of them because there's only 701 possible numbers they can come up with. So I did this via spreadsheet. So this is how I'll explain the programming language after I'm done this, because only a few people are going to care about that part, as it should be the case. And I'll talk about my complete life as computer programming. I could probably do so in 5-6 minutes. The timeline from the start to today. So let's run this program. And what it does is it's going to randomly takes a whole bunch of movements. It's going to start the price at 1. It's going to go up and down. So in this case, this price started at 1. It went down to as low as 0.12 and went as high as 0.109 or 1.09, closing at 42. In this case, long-term trading, there was a lot of big up and down moves for this results to be as such. 4% moves would have meant that you would have lost basically 100%, as you would have lost about a Bitcoin. For every Bitcoin you would have put in, you would have lost 0.92. 10% moves, you would have lost a third. You would have broke even at 20%, and you would have been barely profiting at 40. This is a market that closes at 0.42. I got a whole bunch of them, so I just put a new number in and re-simulate. So this is another small losing session that got up to 3.28. And the profits were better for larger size moves. In this case here, again, larger size moves. This wasn't the case before. This one ended close at 1.65. So selling at 4% was pretty much double. That's 92%. 96%, 112, 156. A small losing market, 0.5. We can see, again, larger size moves winning. How has this changed? The only thing different is I saved the program. That's the only thing different than from the last time I ran this. So I'm going to try to make this bigger so we can see it better. So how are we going to do this? Properties. Let's see. I could even do it probably one size bigger than that. Yep. That's easier for me to see too. Okay. Better. So here's a spot where it broke even, but you actually had a very, very, very small loss. But that wouldn't happen because this is a good time to see this for what I want to talk about. So 4% moves, you would have barely lost. 10% moves, you would have gained 2/3, but these larger moves have done better. This is a spot where it went up to 626, and that makes sense because you go way up, you protect your profits on the sale. Obviously, this looks like if the low is 90, this closed at the low actually. That is amazing. So, yeah, so it went way up and then it's been going way down. I don't have it set so that I could show a graph. I don't know how to computer program language that. I could probably learn how to download the data and I could just copy and paste it through, just put all the results and copy and paste it to a spreadsheet. But yeah, so this is spot we're selling higher. But in this spot here, in the real world, remember, this is a situation where just every single day, all you do is you go to your computer, every single move that is, and then you're either going to basically and I just thought of something too in this example as I was saying, that's why I stalled. But every single day, you're going to check your buy and sell orders and then just manage everything, put new orders in, and then do everything like that every day. However, this would be set up in the real world that you'd be checking your computer 6, 7, 8 times a day, 9, 10, depending on how long this is, because I got it set so every move would realistically be like just a few hours. So that's why. But what I'm saying is, in the real world, you could have, like, in a day, markets go up and down throughout. You're going to get a lot of good volatile sessions when you check multiple times per day. And when you're playing for 4% moves, you obviously have to. So, okay, let's continue on. This is a big loser. We're going down to 0.16. Short term getting its ass kicked again. Maybe the screen was so small I didn't see that selling for short term or playing for short term. Well, there's a spot there where playing for short term was the winner. But overall, all plays won well. This is a spot where it closes at 293. It actually fell down to 0.38 up to 4.5. And I could change it so there's less decimals, but it's not even worth it for me. It doesn't bother me. I just look at the first few numbers, obviously. Oh, what the heck happened here? And this is where I need to see the data. I'm really sure there's nothing wrong with my computer language that I wrote, but it's telling me that the big moves are playing out through this. Now, when I do the next one, this is going to be the better and more accurate one because I'm taking real data, real historical moves. This is a situation of just randomly picking a given, it could be anything any given day. And that's not the way the markets work in real life. So using a random result is only good if you understand market dynamics and you create your programming language to simulate realistic movements of such. That's the only way that you could do it. And I could probably I mean, that could be a job I could do. I just probably wouldn't want to do it. As far as figuring how you're going to write the programming language for situations and how the random number generator would work, but whatever. Here's a spot where it went up to 941, closing at 151, so gains of over 150% across the board. Ooh, that one got its ass kicked across the board. This one here would be looking good everywhere. This one here going to 0.06. So this is the whole risk-reward thing. If you get into a market and you end up getting a 40+% gain at one point, but the thing just crashes hard, Litecoin Cash, BitConnect, all those types of stuff, then you can end up having results like this taking place. And it does make sense, actually. If you get your ass kicked, that on the short term, you're probably going to lose a lot more as well, too. This one got up to 733 and now would be at 177. But regardless of which one you're doing, you're winning. And this is what I was seeing early, like stuff like that. This is where it's across the board. Same thing here. And what I'm going to do is I'm just going to do about, and it doesn't matter, I got it set so that as long as I push a number, it makes a new one. So I'm just going to do a few. You can look and then, yeah, so I'm going to, again, do this where I'm going to take all different codes. I'll look at like 30, 40, 50 different coins in it and check out how these moves would work out within the real results of such. And then this can give me better results. Okay, so then let's talk about computer programming. But I'm not going to put this background for the rest of the way. Maybe I can put some sort of cool Google image to talk about to show what I'm talking about. That might be a good idea. And I'm in the 5th grade at this time, and it's December the 25th, Christmas morning. And I wake up and Santa Claus, and this might have been the second last year maybe I was believing in Santa, whatever on that. But a Commodore 64 arrived, keyboard just like that. I didn't have the tape player. I think I did I used it at one point. Joystick. Oh, I played a lot of games. There was a lot of fun. There was ended up being, well, let's just go into a timeline. After I got the computer, maybe within even only a month, because I remember I was still at my old house, so it had to have been within like 6 to 7, 8 months, because that's when I moved. It was 8 months after Christmas, so it was still in the old house. And at that point, I remember getting a magazine, and there was a Chicken Little game, which you had to just basically it typed the code was there for you. You just really typed it in. It was kind of tedious, but it was a pretty cool game when it was all said and done. So this is what the Commodore screen would look like, and then I would just program all the way through amongst this. And by the way, I haven't even showed you my code for this thing, so I'm going to do that even after I'm done talking about this. But obviously, if you care about the code, then you probably care about the story as well. And so I put the code in. It was really fun. And then throughout that time, even in that old house, I got the book that came with it. There was a book about, and there was programming language, and I learned the basic language over the next, well, several years. I was in grade 5. I over into grade 6, 7, 8, 9, 10, 11, and probably into grade 12. I can remember in grade 6, no, 7 and 8, because I was at the school I was at, getting games where we could share discs with friends at school. And I had a program where you could copy a disc. You had to put one disc in, a source one plus a blank one, flip them back and forth about 6 or 8 times, and we'd have the file. So it didn't take me long before I had about 100 to 200 discs of games that I caught, or a total, maybe 60 to 100 of them were ones that, I don't know, I had a whole bunch that I made, but most of the games or stuff that I made, I could put a lot on one disc because I didn't program for that many large sizes. Now, I didn't have a Commodore 64 when I was in college, because I can remember never having one there. And I didn't have a computer that year either. But again, through high school and grade school, I programmed and I played games. I guess maybe because the computer then, for my choice, was a Sega Genesis at that time. Then came college. Durham College. Which doesn't ring a bell. This doesn't... Have they rebuilt the building? Did they tear it down? Oh, they must. I mean, nothing looks familiar. I can remember this school. I guess this sort of looks familiar, but anyway, that's odd. And when I was in college at Durham, that's when I finally got a different kind of computer. It was a 486 DX4 100. And I took a computer programming class in high school in grade 10, but now I was taking one at the college. And it was QBasic, which is very similar to the Commodore 64. So it was very easy for me to learn. I was at the point where I was actually making small amounts of tiny, minuscule profits by, well, doing the programs for other people, writing it different. Actually, I did it again in college and a few years later as well. As several years, I went to a different school, and I took computer programming at this school. And I can remember going up those steps. I lived literally 1, 2, 3, 4.5 town blocks away, which is pretty much the equivalency of one city block. It was about a 5-minute walk from my apartment to my school. I lived 30 seconds, 40 seconds away from the subway stop that people would get on and off to just go to school. So it was kind of cool, just the fact that I was able to get up when people were getting on the subway to go to school for the same class start time. It was a nice school, but they kind of screwed up the program. It was a brand. They changed things, did things differently, and that really cost it me and pretty much the entire program. But within such, it was language I didn't like too much, the Java programming, and I was learning C++ the best I could coming in. That's what I thought I was going to be learning, and they didn't even touch at all any of that. And I really didn't do much computer programming at all for a couple of years. And there was something that I wanted to learn. I figured I learned QBasic. It was pretty much the same from what I did. And I was finding a game that I thought was pretty fun. And I knew the math on this, at least the math formulas, to be able to write the game, because that was my big strength in programming, was the math. And the game was Blackjack. Oh, what a lovely game. So I figured, well, let's try to find out what the perfect play in every situation was, because the night of the Super Bowl, where the Patriots won their first ever Super Bowl, I had a parlay. New England plus the points and the under. That baby won. I love that. So I played some blackjack. And, well, I played some blackjack when I was in my first year of college. I was playing like $1 $5 stakes here. Here I was playing a little, still small, $5 $10 bets. And after that, I got so intrigued by the game that I decided to write a program to figure out every mathematical best play. And I was able to do such successfully, but I couldn't figure out their random number generator. It looked a little off because every single time I ran the program, I got the exact same results, and I couldn't figure that point out to this day. And then again, I did so about 3 years ago, but I used small basic, and I went for situations to see for card counting purposes, and I learned a lot. And yes, card counting does, in fact, work. And obviously, throughout the channel, I've been using different types of spreadsheets to do a whole bunch of different things, which has been shown many different times throughout this video. So that's the story of my computer programming. Again, as a kid, I probably made about 60, 70, 80, 100 different games. I went into graphics a little bit, but I mean, I'm suck at art, and it was never that good. So back to the program. I'll just go through how the program is done for those that are interested, because at this point, only people that are just my big fans who are still of interest, and computer programmers themselves, or people interested into computer programming, would be watching. So I got it set so that if I don't put a number in, it'll just end the program. So if I put in like R's, press any key to continue, it's done. So this is how the program works. The start. The reason why, now this is not a reference point. This has got a $sign. And this is so if I ever just want to go to the start of the program, I can say go to the start, and it will do such. And I do so at the end, because after I'm done the results, I have it set so that if a number comes in, it just takes me here. So open sat equals 1, so that is what you're starting with. Open by equals 1 divided by open sat times 999, which is the rake. So I'm using 0.1% rake when I'm doing this. Current equals open sat, so the current price. Originally, I set it up so you could ask, like, oh, what price do you want to start with? But why does it matter? It's just getting random results. You might as well start with 1. Own 4 equals 1. Own 10 equals 1. So I'm tracking results for 4 different classes, so I have that set up there. And I have this to find out how many each of them would own. Max equals 0. I really can make max equals 1, and min equals 1. This is just so I can get the minimum and maximum. And within such, when I first did this, I put a whole bunch of different numbers in. It was like so crazy. And then I get this error. I'm like, where did this error come from? Let's just show. Oh, it didn't do it. Let's put more numbers in. Yeah, this came up all the time. I was like, what the heck? I mean, that was like So it was, yeah. So now we got for places equal to 1 to 5,000. So I'm doing 5,000 random generations. So the way I look at it, if you're looking at progress of like, this is like 2 years worth of work, this would be like checking the computer 7 times. That's why when I was thinking that, I was thinking of this. So we're going to do it 5,000 output equals math dot get random number 701. So it's going to get a random number between 701. That's the number that I'm going to use from the data earlier to decide the percentage moves. So therefore current is equal to current multiply the data output. So it's set to be either 1.0 something or 0.99 whatever something. So it's going to do the percentage change that there. So now I'm going to check to see if there's a new high or new low. If current is greater than max, then max equals to current. And if current is less than min, then min equals current. So that does the min and max. That's all I need for that. This here, when you do the left colon in small basic, that's just like, that was rem in the small basic, REM, to just help you know, like just for viewer seeing. So the 4 game, this is for 4%. Value equals alt 04 multiply the current. So that's to get the value of what your shares are worth. Value 2 equals value. I'm gonna need this value later on, because in a real world, if a buy order, and you know what, I don't even need this in this program. I would need it with the next one. I mean, oh my goodness, I'm just thinking now, what a bunch of extra programming I didn't need to do. Oh well. Well, we'll talk about that when that comes up later. Start own equals to own 04. Temporary own equals start own, and temporary count equals 0. BB, that this is needed. If value is greater than 1.04, then the TMPT equals this. So this is just to determine if I'm actually making a trade. That's the only reason I have this, is a counter. Did we trade, yes or no? If it's 1 or more, I did. Own 04 equals own 04 plus 04. Because what would happen is, if the value is greater than such, then I'm going to sell 4% of of that ownership, because 1 would turn into 1.04. So that's why I would sell 4. This here would calculate how many I have to sell, and that would reduce it from my ownership. And the value would then be this multiply the current. So I get a new value. Because what happens if this thing goes up, like, say, and there wasn't many situations that could have done this in it. It's like if it hit like the 15% move, that's it. Again, this is going to be needed. This type of calculation will be needed in this next spreadsheet, though, which may make it easier because I can do a little bit of copying and pasting, but probably not. So now I'm asking the question, okay, well, are we still over that 104? If so, go back here and do it again. And you're going to keep doing it, of course, until this number is between, under 1.04. So this here checks to see if you buy. And the reason why I did value 2 is because obviously this is just for impact of how the orders would go. So then it would make the buys needed, and it would add the ownership of the coins with each one. And that's what this would do. This was a double play check. The double play check was to say, okay, did we, and it's impossible now that I look at how I programmed this for this to happen. So this would never ever execute. This if would never be yes. Or excuse me, yeah, this if would never, it would always be 0 or 1. Always, every single time. But what it would do is, like, for example, if, say you come into a day where something was trading at 1,000, and then it ends the day with a low, which is what it doesn't have, it just has 1 tick per time. But if it has a low of, say it was 1,000, maybe it goes down to 900 and it goes to 1,200. So you would have hit a buy order, say, maybe 2 buy orders and like 3 to 4 sell orders. Well, what's going to happen is after you come back, you're going to have to sell a little bit most likely to do it. So what it does is if it does it, it checks to see after all that's said and done if it's still worth more than 1.04, and if it does, sell the market down so it's worth 1. That's what that does. And in here, these I just copied and pasted the other ones and then just changed this. So I changed Alt 10 to Alt 04. And in this here, same thing. So a value is greater than 1.1. I would change this from 0.04 to 0.1. But on the buyback, what I would do is I would wait for a 9% reduction, because 9% down is pretty much the same as 10% up. And same thing with the 20s, where 20% up would work out to that of 16% down, which is 0.84. And then for the 40% is the equivalency of 28% down, so I did 72. And then to show the results, this is it. Text window using the very basic style programming language. But I wasn't too enthusiastic about doing it for this because, again, like I stated, this was just for random numbers, so I just wanted to see how random numbers moving would portray. This would be more accurate for things like trading stuff like stellar lumens against extra bytes, which you can do strategically when you got two markets that just are different with each other, because then it's just a matter of dividing one coin by the other. To a degree, I guess. Thank you for tuning in and have yourself a great day. So later on, again, I said throughout the week, I'm probably going to get it done by tomorrow. It's 11 p.m. as I'm doing this. I got to get something quick to eat and fix my fantasy football lineups, and then watch some games and do a bunch of other stuff as well. So I probably don't have time to do any more of this until either tonight or tomorrow, and as it is anyway. Have yourself a great day. Bye-bye.